Hi, this is Mike Larson from Money and Markets TV. Federal Reserve Chairman Ben Bernanke just spoke to a gathering of international central bankers in Jackson Hole, Wyoming. And frankly, I can't recall a speech so highly anticipated on Wall Street. During the lead-up to the event, some traders were practically salivating at the prospect that Bernanke would fire up the printing presses again. After all, it was his comment at Jackson Hole a year ago that, quote, "The committee is prepared to provide additional monetary accommodation through unconventional measures if it proves necessary," unquote, that telegraphed the launch of QE2. But here's the cold, hard reality you're not hearing on CNBC or reading in the Wall Street Journal. The Fed simply cannot launch QE3. The political and economic pressures on Bernanke are too great. So that's why his speech didn't throw even the smallest of bones to Wall Street's easy money addicts. Just a few days ago, Texas Governor and Republican presidential candidate Rick Perry viciously attacked the Fed's money printing and said Bernanke would be treasonous if he launched another round of quantitative easing. And Congressman Ron Paul, another presidential candidate, has long made it clear he wants to abolish the Fed altogether. And then there's the internal debate at the central bank itself. At their latest policy meeting, 3 Fed governors disagreed with the decision to keep rates low for the next 2 years. Folks, that's the most dissent internally that we've seen in a policy vote since 1992, 19 years ago. But even if Bernanke tried to defy every opponent, as well as economic logic, and pledged to print more money later on, I believe the impact on the market would last no more than a few days, if that. Why? Because we now have incontrovertible evidence that quantitative easing does not work. Look, all QE2 did was inflate asset prices, while doing jack squat for the real economy and the market it was supposed to help, housing. Now, if it were just stock prices that QE2 inflated, that would be one thing. But QE2 also goosed commodity prices, driving up the cost of gas and groceries for Main Street America. So officials inside and outside the Fed are coming to an obvious conclusion. You can't keep shafting 98% of America so a few Wall Street bankers can buy themselves another Ferrari. And really, even the stock market gains didn't last. Every point the Dow Industrials advanced over the span of 10 months disappeared in just a couple of weeks. To sum up, QE2 had less of an impact than QE1, and QE3 would have an even smaller impact because everyone in the world now knows that quantitative easing ultimately does not work. So even if the Fed does QE later on, I expect the stock market to completely roll over within days. And I haven't even mentioned the economic collapse that's coming down the pike. Just listen to these numbers. The Philadelphia Fed Index and the Richmond Fed Index both just plunged to their lowest level since 2009. New home sales just fell for the 3rd month in a row, while purchase mortgage application volume saw its worst week since December of 1996. And the University of Michigan's Consumer Confidence Index came in at its lowest level since May of 1980. Finally, GDP growth in the second quarter was revised down to just 1%. That's a rounding error from zero in a $13.3 trillion economy. It all boils down to this. If Wall Street pundits are counting on QE3 to save their bacon, they're going to be sorely disappointed. It's just not coming. So please, plan and invest accordingly. I'm Mike Larson for Money and Markets TV. Thanks for watching.